Ha! Moonshot Dispatch, 2nd of December. We are live once again. This week, quick summary of November. Bad. But December, well, actually, started bad, but maybe won't be all bad. Find out once we get going.
Find out next month.
One thing that is up this month so far is the number of Blockies Awards that Independent Reserve has won. Yay, go us. Thanks, guys. Thank you. Organisation of the Year, Independent Reserve 2025. Thank you, Blockchain Australia, now formerly DECA.
No,
Which
formerly
is-
Blockchain Australia.
You know what I mean. We're here with the award. It doesn't matter who gave it to us. We have it, right?
That looks dangerous.
We've got plenty to talk about because Melbourne was great. Thank you for hosting us. Thank you for all involved. We'll come back to that. There we go. Now, the markets. Let's talk about. Let's move on.
Yep, worst
Yeah.
November on record.
And November, yeah, so not only just a bad November, worst November ever.
Yeah, and usually November's an up November. What do we call it? Moonvember? Moon. I don't even know. But either way, there's some kind of fancy, clever acronym that talks about how good November usually is, and this was one of the sort of
One of the
well,
worst.
worst, but one of the there's only been a couple that have actually been negative.
This morning when I walked into the office, Jared says, "Hey man, there's nothing good in the news." But then just before we're about to start recording, he says, "Let's try and be upbeat."
Yeah, okay.
But
Well,
just keep in mind, I've got these two conflicting ideas in my brain because all the news we're going to talk about is bad, but we're going to try and keep it upbeat.
do you have that image I sent last week?
Oh,
I
that's a no.
printer is coming. Remember that? You didn't see that? Oh, okay.
All right. Well,
What's the point of me talking to you anyway? You're just going to ignore my messages.
confusion galore. Well, we're no confusion about which way the markets have moved because it's all been down. So Bitcoin plummeted to 83,000, 84,000 US. Not great. We're still plumbing the lows, I guess, local lows, local whatever you want to call them. And everything else has followed suit. There's been some super thin volumes. There's been worry about the unwinding of the Japan carry trade. People have been borrowing for years, basically zero in Japan, investing it in a lot of other places, of which, a lot of that money found its way into crypto. Which means that if people are about that trade, they're unwinding the crypto trade, I guess. Tom Lee says around a third now, not just one, about a third of market makers have blown up, which is exacerbating the problem of thin liquidity, particularly in the altcoin market. Interesting, right?
Is that exacerbating, or is Tom Lee exacerbating it? I feel like this guy's not a market maker yet. He has somehow all this insider information on market making.
Yeah.
Anyway, he loves to talk about it.
We'll get to what he has to say about it soon. So China is cracking down on crypto again. You know what? China cracks down on crypto as soon as there's bad news. Someone reaches deep into the well. Whenever they just want to dump on crypto, they're like, let's go reach into the China banning crypto for the billionth time.
Yep.
But despite that, China is still one of the biggest miners in the world.
Yeah.
So go figure. Gold is up 60% for the year. Bitcoin is down 10% for the year. That's more concerning.
You have to tell everyone.
Someone's got to turn that around. We're losing control of the narrative, Bitcoiners. Come on.
Yeah. We're supposed to be digital gold.
We are digital gold. Me and you. Bulls are hoping for some Ethereum. So Fusaka. So you can nerd out over some Fusaka upgrades, Nick, that are coming on the Ethereum network. That's a low hat. What do you call them? Hook. To hang your hat on. If we're relying on
scraping
typical
the bottom
upgrade,
of the barrel here.
or it could just be that's what Jared wrote. One of the two. I'm just joking. I can't blame everything on Jared. I will try. What else have we got? That's about it. Fear and index. You know what? The crypto fear and greed index is pumping at 24. Considering we were down at 9 at one point. Look, we're 2.5 times off the low.
Yeah. I mean. It got pretty dire a few days ago. It's kind of bottomed and then we did a double bottom where we went down again last night or the night before and sort of bumped down to, actually no, it was last night sometime, bumped down to 83K again. I think we're up to 86, 87K. I mean, I'd much rather be over 90K to feel vaguely comfortable. I don't like that action, but yeah. I think we're not at the very bottoms now. Hopefully we can, we might get to this later or we can talk about it now, but Arthur Hayes, who's a guy who used to run BitMEX exchange. BitMEX was massive exchange back in the sort of 2017, 2016 up to 2020, 2021 or something cycle. And there's some great law around the BitMEX exchange that we can talk about another time. But Arthur Hayes was the CEO of BitMEX, and since he got out of jail, seen missing, but then he got out of jail.
Who in crypto hasn't been in jail?
Yeah, I know. Tell me about it. Since he's been out of jail, he's kind of been this not a reply guy, but he's always writing stuff about crypto and using his I think he used to work at some TradFi place like Bloomberg or something like that, and he's always writing about his traditional markets experience and how it relates to crypto, and he throws together all these different price predictions and blah blah. Anyway, he's never very accurate as far as I can tell. He's got a lot of knowledge, but he doesn't do very well in picking exactly what's happening.
I saw his talk at Dubai for Token Dubai. It was compelling, but wrong as it turns out.
Yeah. No, he does know a lot of stuff and uses fancy words and concepts that sound really good, but then he tries to put them in practice and turn it into a price prediction, and just doesn't really work out. So at the moment he's predicting by the end of the year, so we're talking less than 4 weeks, the price of Bitcoin is going to be $250K US. It's got a long way to go to get there, and that seems like unlikely to me.
It does seem unlikely at this point.
I'm here for it.
Well, his the thesis that he laid out at Token was actually a really good talk. It was compelling, and if it all comes to fruition, all the pieces line up as he suggested, it probably is a good pathway to $1 million or whatever he was talking about at the time. I think that's what he was predicting, but he did not put a time frame on it. He just talked about Bitcoin, capturing a lot of wealth from various other assets and such, which is yet to be seen. But anyway, let's go in and talk about the blockies. So the big news for us, maybe not you, but the big news for us was we went down to Melbourne for the blockies, and we got some photos from the events. We can share them with everyone. Hey, there's a team winning. You can't see me. I'm hiding behind on the I guess your left-hand side.
Left, yeah.
But anyway, there's the team. There's Adrian in the middle. Get up on stage. G. Good to see you representing. G's here, but she's in the photo as well.
In that photo, look at that.
Yeah, Tyler. No, he just said no.
Why did you choose that photo?
But that's the only one we got.
Photo, I guess.
What do you mean? There's definitely more. Anyway,
what else we got? We got some other ones. They're coming up. There's Adrian. He's Adrian giving his victory address, I guess.
Or was he? Because Adrian also announced other awards, right? He was a presenter. Looks like the one that won the award was the AEDT, the Navadi guys. The ones that he won, yeah.
And there's us at the ceremony. There's also us posing.
There we go. You're not blocked there.
Tyler was nice enough to stand at the side and have a full view.
Gee, you went all out.
Yeah. Well, G actually listened, and I mean, they said it was a black tie event, of which you can see that none of us are wearing a black tie event.
You're wearing sneakers.
G's actually got the black tie. She actually read it. The rest of us just showed up in suits. I didn't even put black pants on.
You got sneakers on.
Jeans. Adrian's got jeans on.
At least you got the same socks on.
Are you sure?
I hope so.
So that was a bit of fun. Thank you for Melbourne for hosting us. It was a fun night.
And you were up for an award, weren't you?
Yeah, I was. I was up for Community Leader of the Award, but I didn't win.
Oh man, we really needed that. That's what this podcast needed.
I know. So I didn't win my category. But Rochelle Cox from Blockchain APAC, she won. But I was happy to see her win because she does do a lot of work, and she was going to be tough competition.
Fair enough.
So anyhow, congrats, Rochelle. I know you're not listening, but whatever. I'm not bitter. No, it was good. It was a fun night. A lot of new faces this year. A lot of new faces, which I guess shows the expanding nature of the industry. It's good to see. Skynet, yes. So getting back to the news and current pain we're all experiencing in the markets. The pain will continue, he says, until people using excessive leverage are gone. Any commentary there is there much leverage left?
Well, that was the interesting thing right? about the dip yesterday was, everyone, we all assumed it just got wiped out when Bitcoin went down to, 81K or whatever it got to a few days ago. And then it sort of built back up to, I think it got to 91, 92K over the last, after that. And then we had this huge dump and there was $400 million of liquidations. And I was like, where did this leverage come from? People are just way too excited, really trying to do that hero trade to, make all the money back that they lost in the previous dumps. And then they just got wiped out again. It's the cycle. It's the story that's repeating over and over again. Hopefully we can just be a bit more sensible about our leverage now and and have a more sustainable rally.
People are going to chase those losses, Nick. People are going to chase those losses.
Yeah.
You got to learn your lessons early. When I was about 18 or 19, we went to the casino and we decided we had not a lot of money because we're pretty poor students, but we decided we'd just roll, with the strategy of going, well, we'll just bet black or red on the, we'll keep doubling up. We'll just keep doubling up.
the bet,
Because eventually we just need one little lucky patch.
Yep.
No, we lost it all.
Oh wow! So
yeah, we
the
had
market stayed irrational longer than you could stay solvant, huh?
Yeah. Well, in our case, it wasn't very long. We had about, I can't remember how much it was.
It's like
It wasn't
3
a lot of
bets
money.
in. We thought we'd be rich by now.
The spinner, whoever it was laughing at us at the $5 table or whatever it was.
Is that actually illegal to do that thing where you just keep doubling the bet? When I say illegal, obviously not against the law, but I think casinos, if they catch you doing it, they kick you out.
Oh, Sky.
Because technically
Yeah.
you will always win as long as you have enough money.
Well, not in
I think there's
blackjack.
bet limits.
Not in roulette because they have like the double zeros, so it's always a little bit skewed in there.
Sure, but even if it's already a little bit skewed, you just have to wait a little bit longer, don't you? It just becomes the same as a loss, yeah. So you just keep going until you win, and then you walk away, and you always win. Like as long as you have enough money, you need to be able to bankroll yourself, but which you guys couldn't, obviously.
Maybe not as
couldn't
18
back it.
students.
No, but I actually think it might be like they'll kick you out if they figure that's what you're doing.
We used to do that on Keno, heads or tails, back when 18, fresh at a pub, and then we had like 7 losses in a row, and we lost a lot of money and didn't have any more money left.
Yeah, so that's the thing. You need that final. The 8th bet would have won it for you. You would have had it all back.
I think we watched it, it did come up.
Yeah. Open interest still at 125 bill. Yeah. There's still more to go, unfortunately.
So about half. We're about. For the people that are listening, the Skynet has dropped a comment. Oh, Jared just took it away. Open interest is still at 125 billion, down from the peak of 225 billion. Yes.
Yeah.
A bit more flush to go, but only halfway down.
Yeah. I mean, and it doesn't have to get to zero for everything to just continue on, but it needs to be at reasonable levels. I think 125 billion doesn't sound completely unreasonable. I mean, it's a lot of money, but this is across all markets, all venues. It just needs to be somewhere reasonable. It's not overextended. That people really, the issue isn't the number of the amount of open interest. The issue is what the leverage is on people, because the higher your leverage, the less it takes for you to get liquidated. So if you've got really high leverage, which is bad in this scenario, yes, you can win big, but the problem is you get liquidated when the price only moves a little bit down. This is assuming you're leveraged long. And so, the open interest could be billions and billions, trillions of dollars, but if everyone's only at 2x leverage, then it's actually fine because the price can go down heaps and no one gets liquidated. So again, it all depends. These are sort of fuzzy numbers, kind of like this on-chain metrics where you're like, well, if a coin has moved, that means someone's sold. It's like, oh, I suppose it could be, but so you just kind of have to take a real rough, high-level view of this stuff and do the best you can with the numbers.
So I've been doing a bit of reading this week. Again, I know significant shift from departure.
Okay.
I learned some things. Well, you know what? A lot of it was just people's opinions. So did I learn anything? Well, I've got a broader range of opinions now, and so. There's one thing about markets that I like, and it's that whenever there's something happens, we try and dissect it. We try and give it a reason. And of course, no one really knows because everyone has a different reason as to why it is. Now, this particular, period through the market, it's been challenging for the last month or two. And some people now are blaming this liquidation on the market makers. Other people are saying it's the unwinding of the Japan carry trade. Other people are saying it's just sentiment driven. And it's just, the psychology runs deep. And who's to say which, could be a bit of all three. Could be neither, only maybe it's something else.
It really depends on whoever's saying it. Are they really confident? Because if they say it with confidence, it's like, oh, that guy knows. It doesn't matter if it's actually right or not. You just have to. And this is where the Arthur Hayes comes back in. Like he says stuff with such confidence. You're like, wow, he really knows what he's talking about. Must be right. Then the price does the exact opposite. Anyway.
Correct.
Sorry, I really took it.
No, you didn't. It's
I
about.
wanted to.
Let me be more confident about it. Now, let me be more confident in asking my questions. Jared, do you know? I don't know.
So talking about that
Japan carry trade, yes.
Yeah, I was going to say, should we talk about the Japan carry trade and what it actually means? Okay, so for a long time now, Japan have been running this kind of economic experiment where they really control. They sort of directly control their inflation. So. The way they do that is they artificially keep rates low. It's one of the levers that they have. They keep their interest rates low, the cash rate. So when you're borrowing Japanese yen, you can borrow it really cheaply. You can borrow heaps, and you're barely paying anything back. It's a great currency to borrow. The consequence of this is that people will try and make use of it, obviously. So they'll borrow yen, they then sell the yen for some other currency, like let's say US dollars. Then they use that US dollars to purchase something that has higher yield. So if you're borrowing at 0.1% or something like that, and then you're buying some instrument in the US at 4%, you're suddenly making 3.9% in this carry trade. That's sort of how it works. And that's sort of, for decades, that's been just working, and it's just been a known entity in the market. You can go and you can do this trade. If you have the rails, you got to like figure out actually how to borrow the Japanese yen, and you got to figure out what you want to do with the money afterwards. But as you said earlier, some of this money does find its way into crypto, less directly into Bitcoin, I would think, because Bitcoin itself, offers zero yield. It's just a pet rock. But there are other, crypto sort of instruments you could make use of that give you much more yield, like Aave or Compound or any of these kind of yield bearing cryptos. Now, what's changed recently is that historically Japan have very tightly controlled the rate, but they're kind of easing back on it now. So they're not really forcing this low interest rate anymore. And there's two issues with that. One is that as the interest rates of these bonds, the Japanese bonds that you're buying is going up, it makes the arbitrage less. So whatever you're buying on the other side, its interest rate, let's say, is staying about the same, but your borrow rate is higher. That means you're earning less. So people are less interested in this carry trade now. And secondly, one of the things you need for this carry trade to work is that when you unwind the trade, you need to be able to buy back the Japanese yen at a low price. You don't want to have sold it at a high price, and then you come back to finish the trade off, and it's the Japanese yen price is much higher now, and you're having to pay more. So you want the Japanese yen price to be suppressed, which works in this carry trade scenario because the people who are doing the carry trade are always selling Japanese yen, which pushes the price down. But as the second this starts to unwind, everything kind of flips the other way, and it becomes this what's the word I'm looking for? Like, it's self-fulfilling. Like the flywheel works in the opposite direction, and so suddenly you've got a lesser arbitrage, so less people are selling yen, which makes yen more expensive, which means when you're unwinding the trade, you're actually having to pay more, and it's just like suddenly bundles the opposite direction. And so that's kind of really what's happening here, is that we're seeing the Japanese bond market not really forcing the price, the cash rate down, and suddenly this thing's starting to unwind, and crypto is getting. I feel like it's a lot of fear, uncertainty, doubt with the crypto trade, because as I say, I don't think it's directly related to Bitcoin. I'm not an expert in how that kind of how it fits together, but it's definitely affecting crypto in a big way, and that's what sort of I think most people are aligning to this dip that we had yesterday, was around the Japanese carry trade issue. What do we got here? Japanese interest rate decision is the 19th of December. 80% chance they raise rates. Yeah, well, there we go. So it's one of these things. I sort of mentioned at the start, it was this economic experiment, and it really has been, because no one else really does it like this. Most other countries, like Australia, like the US, kind of let interest rates move where they're supposed to move. Like the Federal Reserve is an independent body, and in Australia, like the RBA is an independent body that that decides on where the rates are, and they use all these other sort of data inputs to decide what they should make the rates. Mm-hmm. Whereas in Japan, it's kind of very artificially held down, because they're saying, no, we're not going to do inflation. But the consequences of that are this carry trade that's been going on for a long time. But how long can you force interest rates to go down when all these other parts of your economy are doing other unrelated independent things that really need to feed into this inflation number, or into the cash rate number rather? So have I covered everything, do you think?
I think so.
Yeah. So
Chad, what have we missed?
Well, there's a latest story about Japan's new tax on crypto. I'm wondering if that's impacting things as well.
I don't think so. It is interesting, and we have spoken about the Japan tax stuff before. So I think currently the capital gains, like crypto is in this weird like tax bracket where capital gains is taxed at something like 50.39% or something. Like it's a weird number.
Yeah, and they brought it down, didn't they? Because they brought it down to like a flat 20%, which kind of aligns it with a lot of other.
Which is what they've done now. But yeah, I think they were discussing it before. Now it seems to be likely to happen. Taxing your tax on, and it's only certain cryptos as well, like Bitcoin and Ethereum and maybe a few others. Your capital gains is 20%, which is much more easy for everyone to understand. I don't think it really has much to do with the carry trade. The carry trade that we are talking about before is very much very much a traditional finance kind of thing. It's not really crypto related. Crypto isn't involved in that trade at all. Whereas this tax thing is specifically, related to crypto. But again, yeah, I don't think they're directly involved. There's probably some kind of slight linkage there.
Yeah. Okay. Well, it's good. We've killed two birds with one stone. Oh, actually, big Japan talk today because, well, it's got nothing to do with Japan directly, but the Ethereum Fusaka upgrade, which at least has a Japanese word. There we go. Yeah, time for you to nerd out. In fact, you know what, Nick? One of the girls from AEDT, which is an Australian dollar stablecoin, who's doing computer science. I won't know. She's doing a computer science PhD. And she was telling me, she does computer science, so she loves it when you nerd out.
Cool.
Like,
is she the one with the red hair? I've forgotten her name. Rebecca? Rachel. Yes, I spoke to her.
Hey, Rachel, if you're listening.
Yeah,
sorry
Rachel.
for just dropping you in it, but you're both computer nerds, so you can chill on.
I had a great conversation with Rachel at Token in Singapore, I remember. Anyway, so what was my notes on Fusaka? Okay, so basically this is kind of like a nerdy upgrade with no huge customer-facing changes, although there are some. But basically what they're doing is they're enabling this thing called peer DAS, which allows you to split blobs among validators. And that essentially means you can do more blobs than you could previously, because instead of each validator having to look at every single blob in its entirety and distinctly on its own, they can now only look at a part of the blob. And as long as the tens of thousands of validators out there are all looking at different parts of the blobs, you can kind of be confident that they all get looked at and we're validating the right stuff. What piqued my interest on this one actually was the way that they do it is this this encoding technique based on, it's called Reed-Solomon encoding, and the technology that Reed-Solomon encoding was invented for was for CDs, so compact disc back in the day. Yeah, so they had to figure out a way. You got the compact. For those of you might be too young, but there's a compact disc is a CD thing. We used to get our MP3s on, but they weren't called MP3s because the MP3 technology didn't exist. They were just like WAV files, basically raw audio on these compact discs. You put them in a machine and it played music for you. Anyway, no, that's different. I'm talking about music, like audio, CDs, like a CD player. Do you remember? G has no idea. She's like, I know what you're talking about.
You've lost all of Gen Z on this conversation.
Yeah, Gen Z's good. Anyway.
Start talking about the time you had those like dial-up phones.
That's right. Anyway, so compact disc, a CD is basically this thing with it's a digital encoding. So you got ones and zeros encoded in very, very tiny amounts around in CDs. But they figured that because it's this physical thing you can literally have to pick up and put into a machine to play, it can get scratched quite easily. So they've got to work out a way to make it so if there's a scratch on the CD, the whole thing just doesn't stop working, because everyone's going to get scratches. It's ridiculous to expect there to be no scratches on a compact disc. And so, this Reed-Solomon technique of encoding was invented, where basically you can, if you split up a bunch of data into, let's just say 10 lots, as long as you have 6 of those lots, you can recreate the whole amount. So you don't need the full 10. And it's obviously there's a bunch of duplication that happens in here. But this is what they kind of invented so that CDs would work with a scratch on them. So when the CD player's spinning around, like reading the data, it's like, I missed that bit, but it doesn't matter. I can recreate it from these other bits.
Oh, that's actually pretty cool. There you go.
Yeah, and so that's some
deep nerd chat right there.
Yeah. So they kind of did this. That's kind of doing this for the blob stuff as well.
So you're telling me you can burn a CD, and it's fine, but you scratch it and it's not working?
Remember, you won't remember because you weren't born when you had to deal with this stuff. But you remember when you'd play a CD for those, I don't know who, Oh wait, we got some. Anyway, remember when you play a CD and we did a scratch and it was just like skipping, and you could just like, and when you're listening to a CD, like, oh no, that's the scratch is coming up.
Yeah.
I know there's a scratch coming up, and you have to like press forward just to get it jump it over a little bit.
Yeah,
Did that have anything to do with it, or is that just a
no idea.
useless
Mate, you
anecdote?
I had a
She's like-
G-Shock.
You guys are talking about?
I had the G-Shock CD one, which had 6 seconds of memory, so it would read 6 seconds
it's
ahead.
like a buffer,
and
yeah.
if it skipped, you'd still be fine as long as it wasn't a really big pothole. So I'd be rocking
Yeah.
out to Blink-182 in the 90s,
Mm.
showing my age.
Yeah, well, yeah, shall we continue talking about it? I remember back like in the day, the common knowledge on the street was if you had a CD, like a scratch all the way down, that was fine. But if you had a circular scratch, you're almost certainly screwed.
Oh really?
Because the thing reads it in circles. So if you got a scratch that goes in a circle, there's a good chance that a whole bunch of that track is just gone. Whereas the scratch down, all you're doing is missing a little bit from each kind of rotation. Same technology that torrents use. Yes, that's exactly right. So it's kind of the sharding technology that they've built with a whole bunch of it's like you can almost liken it to TCP/IP, where it's sort of you can reconstitute. Sorry, not TCP/IP. RAID in hard drives, like the RAID configuration where like you have sort of striping across disks, and if you lose a whole disk, it doesn't matter because you can reconstruct the data from the striping on the other disks. We've got a lot of thing here. Last time you said, wow, Skynet dropping some knowledge. PDAS means nodes doesn't have to keep 100% of the data, which allows scaling without impacting your hardware network. Yes, that's right. So it's a really real benefit for sort of network throughput. It allows, instead of the entire blob having to be sent out to every single node, you kind of just send out little parts of it, and then together the network all validates all of these different bits. Anyway, the other thing I wanted to talk about on Fusaka, actually, there's a couple more things. One of them was another.
I don't know who Skynet is, by the way, but I hope it's Rachel.
Who Skynet is? Yeah, maybe it's Rachel.
Skynet, are you
Skynet's
Rachel?
dropping some absolute knowledge here in the chat.
Skynet's all over it. Thanks for this comment, Skynet.
Yeah, maybe.
Are you really Rachel? Who was just maybe because after I said Nick loves being a nerd. Well, that's his favorite thing to be.
Well, this is good sort of supporting act here by Skynet. I'm loving it. Just in case I get something wrong, I can make sure.
You're going to
which of course I would never get. The other thing that this upgrade will bring is the use of you can use a passkey instead of a seed phrase as part of the way to secure your wallet. So currently, everyone knows you've got like a seed phrase, 12 or 24 words that you have to remember somewhere, and usually it's your wallet that remembers it, and then you can kind of have an offline copy as well if you want. One of the upgrades here is you can use your phone, like the passkey technology in your phone, to sort of hold your seed phrase essentially. Like it's not a seed phrase anymore; it's using passkeys, but it's that encryption technology, and I think that's pretty cool because it means we won't. There's a period where you have like the Solana phone and I think Samsung might have come out with some kind of crypto phone, and there's a couple of different like crypto phones where they had some secure seed phrasey kind of storage technology built into the phone. I feel like we can probably better make use of the existing technology that passkeys use. And this stuff kind of just allows it to work really easily. So previously you could do passkeys on Ethereum, but it was just very expensive. You spent a lot of gas doing it. But they've changed it with this update to allow you to pre-compile this passkey stuff, and it means you don't use it's just a tiny amount of gas now. I thought that was cool. The other thing as part of this topic is our mate Ted Pillows has.
Ooh, Ted's back.
Yeah, Ted Pillows is back. He's claiming that at the Pectra upgrade, which is back in May, price pumped something like, what was it, 40% or something? Like the price absolutely pumped after the Pectra upgrade. And he's like, what's it gonna be after the Fusaka upgrade? Like history's definitely gonna repeat itself. He didn't say definitely, but he's insinuating that there's clearly something going on there. Anyway, I'm sorry to be the bringer of bad news, but there was a whole bunch of other shit happening during the Pectra upgrade that meant the Ethereum pumped. So like there's a bunch of ETF rotations. There was what happened. I think we might have upgraded to allow 1,000 Ethereum in staking, which meant a whole bunch of people were unstaking and restaking, and so there was all this stuff that was happening that kind of finished around the Pectra upgrade and just allowed Ethereum to pump. That was really holding it down for a while, but it wasn't the Pectra upgrade.
Well, cool. As a complete aside to the name, do you know how the naming conventions of these upgrades come?
No.
Jared might have to fact check me on this, but it's like a combination.
Why don't we get
of
Skynet to fact check?
Yeah, Skynet probably
Skynet's
knows.
actually a lot quicker than Jared.
Yeah. How you know? Well, there's a combination of there's usually like a conference and a city in which that conference happens. So when they do the upgrade, they kind of name it after both.
Right. Okay.
It's a bit of an ongoing joke.
Did you have that image that I sent? I thought this was interesting. Not really related to what we're talking about, but this image here is just a sort of a heat map for where the nodes exist around the world. So you can see like there's a
Star
lot
and
of
city.
nodes.
There you go. Skynet's all over it. Thank you, Skynet.
A star plus the city. Yeah, there we go. Yeah, so this heat map sort of shows, obviously the US has a huge amount of nodes. Eastern Europe has a whole bunch in Asia, and surprisingly, there's a lot in Australia and even New Zealand, which is hard to see behind that.
Russia. Russia's like
Yeah.
no Ethereum nodes in Russia and China.
I mean, do they have electricity there yet? Or?
Ooh.
Well,
Yeah.
most. Well, I'm not quite sure. Well, from the like all the stuff would be on the left-hand side of Russia.
Yeah.
Because it's all the side's close to Europe. There's a lot of
Yes.
empty space in Russia.
Yes, that's true. Yeah.
So
And
Ethereum upgrades are chosen based on a separate conventions for the execution layer and consensus layer, with them named after the city that hosted the Ethereum DevCon conference in chronological order, while CL upgrades are named after stars in alphabetical order. So yeah, Skynet was right and much quicker.
yeah. Yeah,
Skynet.
watch out
Alpha
for
Jared.
Yeah, that's right. All right, what are we up to?
Oh, we've got more stuff to talk about.
Yeah, surely.
You know what?
I was actually talking about sort of Europe and Russia. Should we talk about China?
Yes.
I
Why
think
not?
that was kind of interesting. So, and actually kind of, this is the FUD, the fear, uncertainty, doubt that's been rolled out again. But yeah, China have rebanned Bitcoin, which is definitely not the first time I've said this. Like they've rebanned it many times in the past, so it's not even like the first reban, but they're really getting involved in making sure crypto stays down and no one likes it. I thought what was interesting about this is they, back in 2021, they famously banned crypto mining, and China up until that point was the biggest miner. Basically, I think they had almost 50%, if not over 50% of the mining supposedly came out of China. And so they banned it, and everyone was hooting and hollering and going, yeah, we're going to do this. And Texas were like, we'll take it on. And so Texas, did a whole bunch of stuff and made it very, created this legislative arbitrage, for the miners. And they all flew, hopped on their planes and flew over to Texas and started mining in Texas, which seems like a strange place to mine because it's, quite hot there.
They got a lot of renewables and stuff.
I was going to say you're going to need a lot of stranded electricity, which is really what they have in China. They've got a whole heap of stranded electricity, and it's quite cold.
Yeah.
So which is perfect for mining conditions. Whereas Texas, maybe they've got a lot of free electricity, but when it's hot, you have to then spend twice as much electricity cooling everything down again.
Yeah.
Anyway, turns out a lot of the mining didn't actually leave China, and that was just all a bunch of theatre to show Beijing that they weren't mining anymore. And something like 21% of mining still appears to be coming out of China, which is kind of funny. I think a lot of there's a lot of different ways. Like when you say mining's coming out of China, how do you know? Well, they just look at IP addresses and go, that's a Chinese IP address. Therefore, that block was mined out of that address. Therefore, it's coming. You know what I mean? So it's a rough consensus already. A lot of the Chinese miners didn't want to leave because it's a profitable business for them when electricity is cheap and they're quite cold. And so I think what they did is they do things like use VPNs to hide their IP. And apparently, the huge rise in mining in Kazakhstan actually had nothing to do with Kazakhstanis mining Bitcoin. It was just all the Chinese using VPNs out of Kazakhstan. So it was still Chinese mining that was happening. It just looks like it. It just looks like it came out of Kazakhstan. So this kind of things happen. China's obviously gone, crap, people are laughing at us. We banned it, and turns out we're still if 21% of mining is still coming out of China, it's not 50% sure, but that's a huge number.
This is the worst ban ever.
Yeah, literally, this ban is completely useless. Are they even listening? And it seems like, Beijing want to crack down on this stuff. They say it creates, economical instability and all this, bad things what Bitcoin does because it's not a real currency. And we'll just make it a real currency. Then it solves all your problems. You get to keep the money that you mined it with and you don't have to keep trying to crash the price. Anyway, the local sort of regions, the regional Chinese authorities are very well aware of how lucrative this thing is, and it allows them to all this stranded electricity that they've got, during the off-peak times or whatever. You just turn your miners on and you turn it into productive.
Yeah, your waste becomes profitable.
Exactly. So that's what they've been doing, and so the local authorities are kind of turning a blind eye to this kind of stuff because they're like, look, we understand Beijing doesn't want us to mine it, but we kind of need the money.
Yeah, no, so it's just a good.
They kind of just let it sneak past.
And in essence, it's just a really good trash and treasure sale.
Exactly, yeah. And so, but obviously Beijing, China is a communist country. They kind of rule everything with an iron fist.
No, it must be trash.
Yeah,
no treasure.
It is only trash, according to Beijing. So Beijing now have sort of reiterated their stance on this thing, and are hoping everyone's going to follow suit. But it's kind of, I think to me it's just interesting how much mining is still really done now. I thought it was much, much lower. Like I knew, you'd know there'd be some mining coming out of there still, but it seems like the Chinese guys have got it really good at hiding what they do and sort of going, no, this is just data center activity. This is not mining, and using VPNs and really sort of getting around these bans to continue doing stuff that makes them money.
Yeah.
But talking about FUD, so like as mentioned before, this whole China thing that's been I swear to God, every year China rebans Bitcoin. And a lot of the time it's actual fake news where someone's just reprinted some old article and go, China bans Bitcoin. Everyone's like, hang on, didn't they already ban it? And then eventually it's like, oh, that news article actually didn't exist or it was fake. But this is actual China coming out and saying, hey, by the way, we still don't like it. Very reminiscent of Tether FUD.
Oh, we have more Tether FUD. It's
what
flowing.
a segue. That was brilliant.
Masterfully done.
Yeah, it took me about 20 minutes, but I got there.
You sure? You could segue a bit longer.
Yeah, sure. Okay, so back to China.
Well, the Tether FUD's interesting, and because it always comes around to, and it always sort of times, I swear, people go back to the well whenever they need a good story. They're like, what can we do? China banning it, Tether FUD, yada, yada, yada. Like,
yeah.
We're going back to the well.
Next, and usually that guy who lost his hard drive in the tip, he gets trotted out. Look, this is what could happen to you.
Yeah,
you could lose all your money. He's sitting there like going through by hand.
The Tether FUD's an interesting one because they got downgraded by the S&P Global, sort of saying that they may not be able to redeem all their money because they've got some of their treasury held in Bitcoin.
Yeah,
but that's because they're like, I guess they're saying, and is that the Bitcoin could go to zero and therefore whatever. Then there'll be a gap of like 5% or whatever, which seems unlikely, but of course I guess whatever. Now they're quick to point. They're quick to point out, Paolo is quick to outline that, well, hang on, we've never had a problem redeeming our funds before, so why would we have a problem now?
Yeah. And I feel like they've really done trial by fire. Like we've seen multiple bear markets. We've seen, the FTX event, the Terra Luna event, every single time they get tested. And this is the thing, like, they don't get audited by like a top four or anything like that, but they do have these, public independent attestations, I believe. I'm not entirely sure. I feel like the story keeps changing. But they've done better than nothing, but it's still not fully...
It's not the same as saying it's all there, yeah.
It's not the same as sort of letting someone in and showing them exactly what's happening. But, yeah, the fact is, they've proven time and time again that they are always able to redeem. And as you say, like the Bitcoin thing, that seems to be that S&P's worried about this 5.6% Bitcoin allocation that they have. And what's 5.6%? It's pretty small considering. If they had to, there's a few things here. If they had to actually redeem, if the peg was tested, they've got many other things that they would redeem before they tried to redeem the Bitcoin, I'm guessing, because these guys are Bitcoin bulls. And, you're not going to, like 5%, so the price could go to 95 cents. Yeah, that's a bad depeg, admittedly, but it's not existential. Like the peg can just come back. B, they've got something like $30 billion of cash ready to go, like on top of all of the stuff that all of the stuff that they've pegged, like
all those funds have just been collecting interest for them. Like their war chest must be huge.
So $30 billion on the total market cap of Tether, which is like 160 bill or something like that. It's something like 25% of like 25% buffer they've got, which is massive, like absolutely massive. They're over collateralized by that amount. There is, I don't know, in my mind, there is zero issues with the tether peg.
Oh, don't say that.
In my mind, yeah, like
Don't
look,
jinx it.
am I
No, but
some kind of harbinger of doom?
No,
I'm
I
not
agree
Jim
with
Cramer. Come on.
you. Oh dear! Don't tempt the internet, Nick.
Yeah, I'll become Jim Cramer somehow. I'll just suddenly go extremely
The
balls.
internet keeps receipts.
Yeah, so I don't know. This is I thought this was like another, and it almost like if you were a tinfoil hat wearer, you'd be sitting there going, "Hang on, China have come out with this," and they all seem legitimate this time. They're not like fake news, right? So previously, as I said before, there's been a lot of fake announcements or fake news articles coming out saying China bans crypto. This is not fake. This is real China. And there's been a lot of fake stuff about Tether, like the Tether truther guys who come out and talk about how Tether's, uncollateralized and whatever. This is not fake. This is S&P coming out and actually downgrading them from constrained to weak, I think is the actual ratings. So these are two real things, but it just like it rhymes with everyone kind of piling on when Bitcoin's already at its, the depths of this low point.
Yeah,
And it just seems very convenient to me. I don't know.
there's always there's always a bit of a
take off my
pile
tinfoil hat.
Skynet still bringing some alpha. They put out saying BDO produced some monthly audits as well.
Yeah, okay. Well, I mean,
Okay.
video is pretty well known, so.
It's tough though as well. Like I think for any crypto business of any kind, getting an auditing firm that has the expertise and
Yes.
the precedent to go, yeah, we've already done a bunch of work on a bunch of different crypto businesses, and we're happy to put our name behind all of them.
Yeah, that's right.
It's still you're still a little bit in that grey zone where they haven't really had one who's just fully gone in and go, we fully get this, we can fully put our name behind it. Until that happens, I feel like
It's true.
Tether's always going to be in this grey zone.
That's true.
And I know in history as well, they have in the past they have tried to. Yes, of course. The Sames rating agency that had it really nailed 2007 ratings.
Yeah.
So
It's an interesting point though, because if you look at the breakdown of what Tether has sort of on their balance sheet that covers this, 160 billion dollar, whatever it is, market cap, it's, and you compare it directly to a bank, which is not a great comparison, I'll fully admit. Usually people are comparing it to something like USDC, where it's all in sort of tier one, T-bills. But the makeup of Tether's sort of balance sheet is a lot better than the banks who have all of their money in like crappy mortgages and all this kind of stuff. And Tether's got it mostly in like really good stuff. And then there's like 5% in crypto, like Bitcoin, and 7 or 8% in gold. And they're actually like, it all seems very legit when you compare it directly to some of the other traditional finance institutions out there. And like you're exactly right. All these banks talking about in 2007 about how rock solid their mortgage books were, and that didn't turn out so well.
yeah, it's funny how the ghost of GFC still lives with us today. It's now how many? I can't even count that far. It's,
Like 20
what
years
is it?
almost.
Almost 20 years. Well, we'll be 17, 18
Yeah,
years, whatever
18
it was.
years, something. Yeah.
Depending on when you exactly count of when it started, it's just crazy. I mean, that was a pretty horrible time. It's like nearly 2 decades ago, and people still talk about it. But it's just lingers, right? Oh man, while I'm looking at the next article, can you segue into something, and maybe we can tie it back in with seamlessly?
I've got a question.
Oh, here we go.
Okay.
So at OzCryptoCon, I was speaking to a Bitcoin miner who leveraged, just as Nick was saying, about when power is not in demand in Papua New Guinea, and then leveraging for very small, very cheap power to run Bitcoin mining. That would effectively mean that the hash rate, while people are not mining, would fluctuate throughout the day. Is there good times to mine or bad times to mine based on people switching off?
Yeah, definitely. I mean, the problem though is it's very hard to figure when that is exactly, because there's no, like when you can look at hash rate charts and they seem to kind of go up and to the right generally, but it's all just an estimate. So there's no central repository or central monitoring system where everyone feeds. Right now I'm currently hashing at 47 terahashes or whatever, and then everyone feeds into that and you're like, cool, this is exact hash rate at the current time. That doesn't happen. The only way you can really figure it out is by looking at difficulty, and there's a couple of different ways to do it, but it's all very, very rough. And so the hash rates are never accurate. Like they're a good approximation, but you can't kind of use them to go, oh, far out at like 14, you know, at 3:39 p.m. That's when we should really just try and get in, because there's a couple of blocks there that generally are lower. It's way too rough for that. You're looking at more sort of weeks to months of kind of getting general trends and flows. Yeah, it would be nice, and you could probably make some educated guesses, I suppose. But you know, like where are most of the miners? Well, they're going to be in China and the US, I suppose.
Yeah.
China and the US are kind of opposite time zones, so they're probably balancing each other out, assuming that the best times are at the same time. So you'd think like in the middle of the night is the best time. But
also in China, for example, you get the seasonality around China rainy season. So when they have an excess of hydro is generally when the most mining would come out of China.
But then, like, you know, you've got solar as well. So like when it's a sunny day, you know, it's the middle of the day, that's when there's heaps of electricity sloshing around. We need the miners to soak that kind of stuff up. Yes, there's a lot of different. I'm not an electricity guy. We need to get that guy, Hass McCook. Do you remember him? Were you around for Hass McCook times?
No.
So he's this Aussie guy who used to do a lot of research on mining and, you know, feasibilities and all that kind of stuff. He would probably know the answer. If you're listening, Hass, send us a message. Tell me what I've said wrong. I've probably said.
Well, let's segue then into Australia.
Oh yeah, tell me about the Australian regulatory.
Well, this is kind of
landscape.
interesting. I know a month or two ago, I made some comments going, well, we're never going to see legislation. It's always 18 months away. No one's ever going to do anything, and blah, 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 it's never going to happen. Well, I was wrong, because it looks like it has happened. So Jim Chalmers, Australian Treasurer, Jim Chalmers, and Financial Services Minister Daniel Molino introduced the Digital Asset Framework legislation into Parliament this week. Which, so the bill, I mean, broadly speaking, for those who aren't aware, I guess it covers sort of two main things that they're looking at. One was called digital asset platforms, which is, I guess, rules around how digital asset platforms should work. So people like us, for example, exchanges. And I guess the overarching thing is all about, you know, client security. And the other one is tokenized custody providers. So that's more to do with like real world assets and custody platforms and professional custody services and all this kind of stuff. And effectively now there is, you know, those two main categories of which, you know, you'll need an AFSL to operate either of those businesses, provided you're at a certain scale. That's kind of the nuts and bolts of it, right?
Yep.
So it's going to look at all the things from, you know, safeguarding to, you know, liquidity and, you know, expectations around how you deal with clients and all those kind of things, right? So it's good stuff, and it'll apply to the exchanges. And yeah, the tokenized custody providers, which are more and more coming online. So think of maybe like a custody business. Yeah. Not just for exchanges, but for the emerging world of tokenized, you know, financial products. Bonds,
you know
property, you name it.
Yeah. Okay. Yes. Sounds good. Do you know? Does this have any relation or bearing on the ASIC info sheet stuff that was released a couple of months ago?
What's that?
So
it's kind of like a bit of an update to that, I think.
Right. Because I'm kind of interested to see ASIC. You know, obviously aren't in the game of creating legislation. They're in the game of enforcing legislation. But they kind of came out with this info sheet saying, look, here's how we interpret current legislation for some of the crypto stuff.
Yeah.
And
and
some of it wasn't very favourable, I think.
Correct. And also as well, a lot of the stuff you have to remember, that's just their opinion, man. That's not actually law. Right. And that's
But ASIC, like, their opinion holds a bunch of weight, I imagine.
Well, it depends, right? Because it's kind of like for example, we can have a disagreement where we have gone to our lawyers and said, hey, lawyers, what do you think about this? And our lawyers will go, well, here's our interpretation of law. And ASIC will go, well, here's our interpretation of law. It's up to the courts then to decide who's actually right, who's actually interpreted that law correctly based on, you know, whatever actions sort of brought. So there's still going to be some uncertainty, still going to be some, you know, there's still going to be a lot of detail that's missing. In fact, if you look at some of the commentary around this article and people like Joni Pirovich, who's a well-known lawyer in the space. In fact, we had her on our podcast. Sort of made a comment going, look, there's still some necessary detail out there which, you know, people are going to have to fight over, because ASIC's going to say one thing and the industry's going to be like, well, no, actually we think very differently to that. And at some point there's going to be, you know, a collision over a debate over who's right and whether it ends up in court or whether they just come out and clarify that through some other means. Again, you're going to get the lawyers on here to kind of discuss all that stuff. But you know what I'm trying to say? Like
definitely.
we have
And
a
then there's
framework in place and some like basically a regulatory approach that said, hey, if you fall into these categories, here's a licensing regime that you need to apply for, and you need to maintain these standards. And it's going to be expectations over how you deliver your services. But there's still going to be detail. In fact, I mean, there's still detail now in the courts. I mean, the ASIC take banks to court because they think one thing, ASIC think another, and then the courts decide who's right.
And that happened recently, right, with Block Earner.
Correct.
And they end up winning.
Yeah.
So yeah.
And ASIC, and for example, ASIC has now got a track record of going to court a number of times and losing a couple of times as well. And so you might say, well, look, maybe the record shows with the amount of times you've brought litigation, you were wrong.
Yeah.
So maybe your opinions aren't.
Yeah, fair enough.
whatever.
Okay, maybe maybe their thoughts don't have that much weight to them.
But obviously, they're the regulator, and everyone wants to. And this is the thing, right? This is the whole reason, I guess, this whole process is going on, is people want that clarity, because nobody wants to go, well, I've thought this, and all of a sudden now I'm spending the next 3 years in court against ASIC. People would much rather go, look, we're all clear, we all know what we're doing. Okay, here's the law, very clearly defined. But just the nature of living in a society where there's laws means that not everything's super clear. So it's not completely resolved, but this is a major step, I think, in the right direction. And kudos to everyone who's been involved. Blockchain APAC, which was, Rochelle, who beat me in my category. Steve, no, well done. This is a lot of they've been behind the scenes in this. Dika, who had the blockies, they've all been involved in this, and there's been a lot of lawyers and a lot of consultation papers, yada yada yada. And it's good that the government has come out and said, no, we're taking this industry now seriously, which is generally a great positive step forward, I think.
Yeah, agreed. And it seems like if they're regulating the platforms and not the actual assets, that seems like a win to me as well. I know at one point they were looking at going, okay, we're going to have this like master sheet of every crypto out there, and it's going to go like security or not security, or whatever we call it here, MIS or not MIS kind of thing. And
exactly.
and that was just madness. But it seems like they're now, at least with what Chalmers has released, it's more of a platform level thing, which makes a lot of sense. A lot more sense to me anyway. It'll reduce the barriers to entry and reduce the red tape. Yeah,
it definitely provides a level of certainty we've not had before, but there will be more challenges and disagreements on how people view things going forward. So fingers crossed that's all, continues to progress. Okay, so we had a question from...
Theo on TikTok asked if there's any good books for crypto. I recommended The People's Money
yes.
by Adam Tapper. But I'll let you answer the rest.
No, well, it depends on what you're looking for. Like, I remember one of the first books I read was Safe Dean's The Bitcoin Standard, which is good. Kind of an introduction into, the philosophy of crypto and Bitcoin in particular. But I guess depends, because there's a lot happening in crypto right now. It's been the growth of, and the technology has grown exponentially. I mean, come and talk to Nick's probably a better way to look at your head around stuff. But I don't think it's hard to even keep up with the amount of stuff that's happening. You kind of have to just follow your nose once you sort of go with the basics.
Yeah, I think like a lot of the books you mentioned, like the People's Money book, which is one, it's free on our website. You can go check it out. Maybe we'll put a link in the description or something like that.
I have one. It's not a book, but it's a podcast. So if you want to read, you can listen to it.
Is it the Moonshot? Huh? Moonshot Dispatch? Because we're...
Yeah, that's no, but there's also a podcast by a podcast episode from this podcaster Tim Ferriss. He's very famous.
Tim Ferriss,
yeah. 3 years ago, he interviewed this lady called Katie Hahn. So she used to work as a federal prosecutor for the FBI. She was tasked with investigating the Silk Road and the dark web. But it was from there she learned about Bitcoin and the philosophy of Bitcoin and crypto. And then now she's transitioned into, I think she's one of the VCs sitting on Coinbase.
Wow.
So she went over to the other side after going and investigating the dark web and whatever. So it's a really good podcast for anyone who wants to start off with crypto. That was actually how I got into it.
Yeah, wow.
Oh, there you go. Okay.
That's cool.
It's a really cool story.
I think a lot of these early sort of books and podcasts and stuff like that are very Bitcoin focused, which is great. Sort of Bitcoin is obviously the original crypto, and there's a lot of like libertarian vibes where people are saying, it's your money, it's uncontrollable by the government, it's the people's money, blah blah blah. And I fully subscribe to that. But I do, as you say, I think like these days crypto has grown so far, and it's so much more than just Bitcoin. And it's kind of showing, like, especially if you look at something like, there's a chart called Bitcoin Dominance, which is kind of maps Bitcoin versus every other crypto. And obviously, you know, if you go back far enough, it's Bitcoin's, it's at 100%. But these days it's sort of, I don't know what it's at, like somewhere between 40 and 60%. It's definitely down from all-time highs, obviously, because there's just all these other cryptos out there. Now, yes, a lot of these cryptos are vaporware and have absolutely no benefit or you know, real world use case. But there's still a lot of stuff, like there's going to be, you know, you're going to find your diamonds in the rough there of other cryptos that are useful and worth something, and that have like a real use case. So where to read about that? I think that's more difficult. I think it's definitely, if you're looking for a book to begin with, like you're sort of at the start of your crypto journey, the People's Money book that we've got it 100% explains, you know, where Bitcoin came from, what its purpose is, why it's so interesting to all of us, like why we're so excited about Bitcoin and how it differs from, you know, I remember back in the day, like I was like, what, Bitcoin? We already have PayPal. Why do we need it? Like, what is internet money? We've got I pay for stuff on the internet all the time with PayPal. But it just really kind of helps you understand what the difference is and why it's important and why in a first world country we probably don't realize how good it is. Like in a first world country, we've already got a monetary system that works so well. Like, and especially in Australia, we've got, you know, this MPP, the instant payment system, PayIDs and OSCO and all that kind of stuff, and it's phenomenal. Like, it's way better than other first world countries have. The ability the ability we have to send to a phone number, and generally the person's going to receive the money, and it's instant 24/7. You can't do that in a lot of other places, but especially when you start going, you know, down the tail into the second and third world countries, something like Bitcoin is a game changer. And just, like reading these books really help explain that kind of stuff. I feel like, Jared, you're about to step in. I guess in terms of how Bitcoin has evolved since then, cryptocurrencies have evolved since then, and what other interesting things you can do with them, and why. And we can use this as another great segue to the money markets topic that we'll get onto. So why crypto is getting picked up by all of these traditional companies and getting used instead of normal money. Like, why would they do that? And you might hear people sort of throw around the idea of, oh, it's more efficient and it's quicker, and it's, but why is it? Like, when current financial stuff is already on the internet, it's already online. Like, I can, when I send money to you with a bank transfer, there's not some guy with a suitcase who goes from my bank to your bank, and that doesn't happen. It's all on the internet. It's been on the internet for years and years and years. So why is crypto better? Well, there's a lot of understanding that you need to get to figure out why that actually is. And so we'll use this as a segue to move into the money markets topic, which and often we get these kind of money market topics where people are going, oh, we've tokenized some money market and put it on Ethereum or put it on Solana or whatever. And it's, it's marginally interesting. The reason why I think this one is actually quite interesting is that this company called Amundi have tokenized one of their Euro money markets. A money market is basically just like a fund you can invest money in and you earn yield on it, essentially, right? It's very safe. There's usually a lot of money. Because it's safe, people can just kind of set and forget. They just chuck a bunch of money in there and it's just safe yields that they can earn. And meanwhile, the money market operator is kind of doing stuff with their money to make sure that the yield is earned. Amundi have done this with their Euro. I think it's Euro. Can you check the?
On the wrong page.
It's near the end. Sorry.
Amundi, that's right. I flicked through it. Asset manager, yeah.
What's the name of the fund?
Amundi.
No. What's the name of it's like Euro something or other.
Okay, Europe's largest fund manager, Amundi has debuted its first tokenized share offering on Ethereum for Euro money market.
Money market, yeah. Okay. And so they've basically opened up this thing. The reason why it's interesting is because Amundi is orders of magnitude bigger than the other places that have done it. So we've spoken in the past about Van Eck and Franklin Templeton, about who have done these kind of things already, but they're kind of just real, almost niche players who are really keen on crypto, and it's awesome to see that Amundi is huge, absolutely huge, $1 trillion kind of money market fund, and they've chosen Ethereum to put their money market on. So I thought that was interesting, and they don't choose it just because it's a cool new thing. That's not what these guys do. They're not sitting there trying to differentiate themselves. They don't have to create some kind of buzz because everyone's already using them. They're doing it because it's more efficient and it's a better way to do it, to launch these kind of money markets on something like Ethereum.
But it increases liquidity for a lot of things, and it increases access and increases like the rails. So I use an example. I gave a presentation the other day. I was talking about the tokenization and why people should care. Because most people here, a lot of people, particularly in TradFi, you mentioned crypto, and their eyes glaze over. Because the reality is, if they're not buying a particular token or haven't got their bags, invested in, like, they've got a vested interest in some particular thing for whatever reason, so they don't care about it. I was thinking, how do you kind of relay the value of sort of tokenization to someone? And I use an example, and I think we're going to reference some Skynet stuff here too. But like, for example, like, I had heard of this token, but I hadn't really looked into it. Aspen Coin. Have you heard of Aspen Coin?
Aspen.
Yeah, which is basically there's an Aspen ski resort which they tokenize 20% of it, and the tokenization is effectively just conferring the rights of that, the underlying asset to the token holder.
It's like a share?
Yeah, it's kind of like a share. It's like
so you get shareholder voting rights, do you?
Well, it's not a share. It's in property, so it's a property. So it's a bit more like you own.
Yeah,
I don't know. Like for example, commercial property. You can't go and buy yourself a commercial property. You can buy a commercial property fund, which has a bunch of different properties, but there's not probably the liquid market for that. It's probably not that great.
So do you earn rent from the Aspen coin or something?
Yeah, so it confers the right. So the token kind of tracks the value of the, and I'm not suggesting you rush out there and buy it. There's probably some other things, buyer beware kind of stuff. But like conceptually, let's say for example, all it does is it's a value of the value stays relatively stable until people trade it. But then each month it just pays you some of the rent. And so you get paid out that rent, right? But my point is that to get access to that investment and to otherwise, first of all, you can't just rock up to the owners and be like, hey man, can I have 20% of your business? Or they might be like, yeah, but like you've got to go through and do this like 3-month process of buying, selling, transfer US dollars. And right. So imagine if someone said to me, hey, I just want to go buy 20% or even just 4% of a ski resort. And normally everyone would be like, you're mad, go away. The transaction costs are stupid. You can't buy it anyway because, the structure's not there for you to buy it. Yeah. But if you tokenize those offerings, you've unlocked a lot of liquidity and access and the types of people who can now invest in that particular real world asset. And it can happen in minutes, right? Because you can list that asset on a DEX or wherever, or even on a SEX and just kind of like buy USDT or even pay with fiat instantly. And you've unlocked a process that otherwise would either, if at best, at worst, should either not be available or at best case would be really, really difficult to invest in. And all of a sudden, through the process of tokenization distributed on, decentralized networks, you can now do it in 5 minutes. You know what I mean? That's a powerful unlock.
I agree.
You know what I'm saying?
Except there's a caveat, I suppose, that a lot of these like market funds, market money funds that you're buying are still gate kept. So they're not just listed on some DEX and you go away and
sure.
But maybe in the future, like I don't see why it wouldn't sort of get there at some point, maybe. But it would be very cool. All you need is a MetaMask wallet and you can invest in this kind of stuff if you wanted to. I guess So for me, the takeaway often, for this one, really is that they chose Ethereum, and this is kind of a theme over the last few months when we've been talking about these things. These guys always seem to be choosing Ethereum. Ethereum seems to be Wall Street's,
Tom Lee did call it Wall Street's
network
blockchain
of choice. Yeah. Having said that, this is out of Europe, right? This isn't from the US, and a lot of these money market funds that we've been talking about are from Europe. Europe seems to be just quietly running away with this idea, this RWA money market fund idea. And the US doesn't seem to be really doing much in that space. So I think that's interesting because everyone historically, you look to the US for what's next, and really Europe at the moment is going, you know what, we see some value here. Let's do it. That's all I wanted to talk about on that one.
Like I said, I think it's all good. I mean, you've always got to look at the trajectory of where things are going to, and sure, like to access tokenized versions of real world assets right now is still difficult. It's still limited. But even that one example I gave you of as more and more people start to use this way to distribute allow people access to investments, it increases liquidity, like it unlocks liquidity. and it just means people from around the
Definitely.
world can participate, not
Yep.
just people within your region.
Yeah.
And it's a
Again, as long as like there's going to be so many regulatory things where.
this needs to be worked out.
So yeah,
True.
because a
And
lot of the time it's like not only people from the country are actually allowed to do it. and blah, blah,
Sure,
blah.
and there'll be, but either way, like let's say if you're example, if you're in a, in Australia we have like wholesale investor things and whatnot, and there'll be certain distribution requirements that you have, but either way, you've still got access to something.
Yeah,
There'll be more people will be access to your thing than
and it's
before.
just a phase one as well, right? Like fast forward a few years, and these barriers are probably going to be broken down, or at least become more. The wheels will be greased, the cogs will be greased, and it'll be easy to get in and out of these things.
Yep.
I was watching one of my favorite creators the other day, and he was saying he's not exactly crypto focused. He said, "Do you remember a couple of years ago where all the Bitcoin heads were all like, this is the currency of the future, and in 10, 15 years, everyone's going to be using Bitcoin to buy and sell goods." And he said, and he kind of said, kind of smugly, that hasn't happened. Ha ha ha. See, the crypto thing was all a lie. I've turned around and I've written in his comments and I go, well, billions is moved per day in stable coins. It kind of did fulfill its own prophecy. It wasn't Bitcoin, but crypto does take over. And this segues into something that Skynet said. He goes, you don't realise the unseen limits on your finances until you push up against those limits. Try spending 50K without the banks climbing all over you. That's 100% right. So, you don't get those walls when it comes to moving stables around or
Not
moving
yet.
cryptos.
Not yet. But,
So-
keep in mind, like, I was
Now go on.
I was just going to say, like, there is, I don't know when you can't, for want of a better term, you want your Fed coins that basically police you, right? So at the end of the day, there are still a lot of stablecoin projects out there right now that are widely held that if they really wanted to, they could stop you from spending.
Yes. I think
So
something.
the only one that's, what networks are fully uncensorable, really? What's the most censorship resistant network?
I guess the one with the most amount of miners, so it's going to be Bitcoin or Ethereum, I suppose. Yeah, and like people have tried. There's been a big debate on Bitcoin kind of recently about, about filtering. So not necessarily filtering, stopping people from transacting necessarily, but stopping certain types of transactions. So transactions with like, images, JPEGs in them. People are deciding this is spam, and we need to stop propagating these blocks with the spam in them. And so they've been trying various ways. That's had a couple of interesting side effects. But the thing that I'm thinking about when we're talking about sort of blocking transactions or big crypto is this sort of way anyone can transact at an even playing field. We're bringing like the concept of a travel rule. The travel rule is coming into more and more crypto jurisdictions. That's what I'm looking for. And yeah, so at the moment, Singapore have famously been regulating crypto for a few years now, and they require travel rule considerations on all transfers. The travel rule sort of requires you to have KYC'd both the receiver and the sender. Usually exchanges, the way they do this is instead of trying to KYC whatever random receiver is getting sent to, they just say, look, you can only send it to yourself. And if you send it to yourself, then of course you're already KYC'd with that exchange. So you can only withdraw coins to your own personal wallet. This concept of travel rule requirements is coming into Australia, I think soon, like in March or something like that, this coming year, in March 2026.
Yep.
And I feel like that's kind of another nail in the coffin is probably not the right way to say it, but you know what I mean? Like it's getting tighter and tighter and less, free market-y and more government is going to control exactly where and what you send to. The nature of how blockchains work at this stage anyway will still mean that there will be this other, underbelly of blockchain transactions that can go wherever you want because no one's controlling them. It's from like one personal wallet to another. But, the exchanges, like it or hate it, exchanges are the major way for on-ramping and off-ramping funds from traditional finance, like from your, fiat coins, from your government-issued currencies. And so and as soon as you use some kind of centralized exchange to on-ramp, off-ramp, they're going to be required to do travel rule stuff,
Hmm.
which kind of just is that, like, and it's just again, I feel like this is, you know, I've got my tinfoil hat on, but it's phase one of the Big Brother lockdown. You know what I mean?
Controversial.
Anyway, like, and I'd be interested to see what the landscape looks like in 20 years' time when, you know, obviously technology has moved on and legislation and regulation will have moved on as well. What more can we say on this? I think, yeah, the travel rule thing will be interesting, and it's annoying. It's not the end game, because at the moment, you know, once you send money to a personal wallet, it's, you know, you can do whatever you want with it essentially then.
Yeah.
Exchanges will still do, you know, blockchain analysis stuff to figure out, you know, if you're sending to terrorist financing or whatever, and just because it's 2 hops away doesn't mean you get off. You're still...
Sure. But like, you know, as a couple, Skynet's pointing out, even now, like the peer-to-peer stuff is exempt from travel. I think it's true, but like, I guess what the travel rule is really just relates to moving where you move money from an exchange to, right? And after that, of course, depending on what token you're holding, there's a level of censorship resistance in that network.
Yeah, potentially. Yeah, I guess you could sort of do those privacy coins and whatever. Peer-to-peer is exempt only because they have no way to control it. I feel like if there was an easy way for them to control it, they'd probably do something about that. But yeah, I mean, as long as we have actual cash, which is obviously peer-to-peer, like physical cash, you know, they can't sort of stop me paying you $20 for something, or they can't require a bunch of stuff on top of that, because who's like... It always reminds me. Do you remember back in COVID when we used to have to like take those COVID tests, the rat tests, and according to the government,
self-report.
Yeah, you had to self-report when you had a.
Or we'll fine you $1,000 if you don't self-report.
Like,
I loved that rule.
That's so funny.
The government got mad.
Anyway, yeah, it always. Yeah, like that kind of thing. You know, why they even bother coming out is so completely unenforceable. It's just laughable. And, you know, trying to enforce travel rule on peer-to-peer is just laughable, and I'm glad they haven't tried to enforce it.
It would be laughable.
Because that would, like, that'd become a voting issue, I think.
Yeah. If you do anything wrong, you come and self-report, you criminals.
Yeah, that's right. Hand yourself over. Anyway. But it'd be a good way to, like, self-report someone else. Look, I've got Anyway, yeah, I think, I don't know, we get into this topic a few times, but it's... I don't think necessarily we're going down that path, but it'd be good to sort of be prepared and not have it take us by surprise. And suddenly we're like, oh no, we're like completely oppressed.
Yeah,
we can't send money where we want to anymore. And
well,
everyone, yeah, that's right. Everyone has to start using Zcash. Turns out Zcash is the new Bitcoin.
Well, technology moves fast as again. So I'm loving the comments today. Skynet's been great, engaged. I hope you come back next week. Yes, devs can definitely code faster than regulators can write, and that's going to be the nature. Technology is always bounds ahead.
I don't know if I agree with that, to be honest.
What?
Because I think regulators, like if they get beaten 3 times, they're just going to be like, you know what, we're not going to try and regulate this specific thing anymore. We're going to just go higher and higher and umbrella, if you know what I mean, and just do this overarching regulation that's like you can code as much as you want, but it is now illegal to touch Bitcoin. So, you know what I mean? Like that, you know, this is I'm just taking things to logical conclusions.
Is it though?
Well, I hope not. But if
everything in the world gets banned one day, Nick.
Yeah, that's right.
Just in case there's something wrong with it.
We become batteries like the Matrix.
Oh, we were down in Melbourne for the Blockies. They can't even ban machetes. Machetes.
How did you pronounce it?
Machete.
Love that.
Machete. Have you seen Machete?
Machete.
It's great. It's got Robert Trujillo. Have you ever seen a movie called Machete? It's so good. No, take that back.
Is this Jungle Tropic Thunder?
No, it's called Machete.
Oh.
I'll pronounce it terribly, but yes, that's his name. That's the character's name.
No, I don't know.
It's the best. I can't believe. Don't ever, Jared. It's so good. It's the best. It's like maybe not the best, but it's pretty good. Spaceballs was also amazing. What am I going to do with these people? Oh yeah. Oh look, we got. Oh, as soon as you mentioned peer-to-peer, we had the bots jump online. Did you know that the whatever, I'm not going to pronounce it.
Let's not promote it.
But let's not promote it. Bam, the spam bots are straight onto us.
I mean, it's not a very good promotion. We should just, like, if it's at a high price, whatever token they're shilling, we should be selling that thing. Anyway,
Oh, I thought we were talking about Machete now.
So I think one thing. No, let's not talk about that anymore. I think one thing we should talk about is strategy.
Oh,
Strategy.
yes.
That was kind of interesting.
Well, basically, Fong Li, I guess his
Your
actual
mate, you've
CEO.
met him, right?
No, he did not. He did not come by. He was there. He was there at the CryptoCon, but he did not come by.
I thought he did come by. Maybe.
We did it. We weren't there when he did. We met some guys from some Australian-based strategy guys who were chatting to us, and they said, "Oh yeah, we should definitely meet Fong while he's in town," because he basically did his keynote address, had time to shake a few hands, then he had to go.
Right.
But he was on. Yes, so I guess we're now talking about. He was not cornered, but he was being interviewed, and he said, "Look, even though it's the last resort, mathematically there is potentially a point at which they would have to sell some Bitcoin."
I feel for me, like again, cynic, doomer, whatever. This
Debbie
is
Downer.
like,
You said Jared said, "Don't be a Debbie Downer. The market's already depressed enough," and here you are.
Yeah,
we've
no,
got
it's
the
true.
brains trust. We got all the heroes in the chat at the moment. So
Skynet, you
we got
machine.
Rob McGrath, we got Skynet, we got Thanos from Titan, and bots.
Nice, love it. Yeah, okay. I sort of feel like this is them easing their way into the idea and like just vaguely socializing the idea of selling Bitcoin, because up until this point, the concept of strategy and Michael Saylor selling Bitcoin just didn't even exist, right? He's such a retarded bull on this stuff. Like he just says the most crazy thing. The memes that have been spawned from the nonsense that's come out of his mouth has been hilarious, but he's just been, and he's just full of belief. Like he never says anything and then like has a little giggle afterwards, right? He says it with a completely straight face because he fully believes it. I believe he believes it. But my point is that, the idea of selling, he would never sell. Like he's just too bullish on this thing. All of his price predictions are ridiculous. Even his bear market price predictions are like, I'd be cheering for that kind of thing. And so now it's not him.
What if he's right?
Oh, I hope he's right. But my point is, like,
You're going to make a public apology on
when
show?
does he become right? Like, which
When you become wrong.
what? I don't know. My point is, like, they've never spoken about selling before, and now this old mate CEO's come in and said, look, it's technically feasible for us at some point to possibly require a sale of Bitcoin in these certain scenarios, right? He's really like distanced himself from the idea, but he's verbalizing it, which is the important thing to me. And I feel like step 2 is going to be in six months' time when we're in the depths of the next bear market. And he starts going, well, remember how we spoke about that? Well, sometimes, you have to just sell a little bit to keep the wheels going. Now, I'm going to walk straight back from this sentiment and say he's probably not going to sell. They've raised this $1.4 billion of like slush that they can use to pay the... So basically they've got all these instruments that they've issued to the market, and a lot of them are yield-bearing instruments that basically you buy the share and you earn yield on just constantly. You're earning yield. So they've got a clear sort of projection of what they need to pay out for these yield-bearing instruments, and with the $1.5 billion of slush that they've got there earmarked for this stuff, theoretically, worst case scenario, they've got about 21 months of runtime. And that's kind of an interesting number as well to me, because if you look at that takes us through to about September next year. And that's, if 4 market cycles stay intact, we're probably like pulling out of the bear market at that point. And so theoretically, if they've just had to really dip into this $1.4 billion to pay out all of the shares, like the yields that they have to pay out for these shares, Bitcoin should probably be going up. People will start getting interested in MicroStrategy or strategy again, and they won't need that slush anymore. They'll be able to, this flywheel system, some might call it a Ponzi, will kick into gear again, and they'll be able to pay off their yields without having to sell any Bitcoin, and they can stop dipping into this $1.4 billion that they've earmarked for it. So I don't know if this all is true and everything works out as they plan. I think strategy's probably going to be okay, and there'll be a definite bear market, as there is in any kind of levered product like this is. But there should be some people who make money out of it, I think. But yeah, I think I just think it's very interesting the way that they've changed the narrative now to we would never ever sell, like Bitcoin is forever, we're never going to sell, blah blah blah, to we might have to sell if things, go in certain direction.
They didn't say that though. He was just talking about mathematically, yes, if it got to the point where it's so, like, it makes sense. But he never actually said, I mean, that's always been true, right? That's always been true.
Strategy fanboy.
Speaking of retarded bulls,
That bull's
Oh, Jared was out there. You were looking at it, going, make me asking AI to give me a realistic bull, and they gave you that, whatever that is. I guess it's a bull.
I mean, this bull looks fine. He's just
Yeah, it looks all right. Doesn't look retarded. So I'm just keeping balancing, Nick.
yeah. I just think like there's been a lot, where, when you buy a MicroStrategy share, I understand that because you're buying basically a Bitcoin proxy. But now that they've started releasing all of these different share type, like these instruments that allow you to earn yield, and the company itself only has this small percentage of it that actually does, yield generating operations, like the software part of the company. How do they plan to pay the yield? It does become very Ponzi-like. And I'm not calling it a Ponzi. They're not always using, new investors to pay off old investors or whatever. They've invested the money that's been paid to them via these share issuings to buy an asset, and the asset appreciates. And then, but when the asset doesn't, it's sort of, the flywheel goes both ways. Yeah, I don't know. I'm just kind of nervous. And I'm in two minds about this actually. So if Michael Saylor ever said, yeah, I'm selling 1,000 Bitcoin, and they've got hundreds of thousands of Bitcoin, but if it's a real sort of mind shift, and I think that will be a real big deal in the market if he goes, yeah, I sold 1,000 Bitcoin, even if it's only 1,000. A, but B, on the other side, I think I've been kind of publicly talking about in previous episodes, I don't really love how much Bitcoin MicroStrategy owns. Yeah. I think they own a dangerous amount, and they're only buying more, and that gets, with every purchase, it gets more dangerous. The more percentage of the total Bitcoin that exists that they own becomes this concentration risk, and I don't like that. Bitcoin should be as distributed as possible. And this kind of like whale event that we've been experiencing over the past couple of months, where everyone's been talking about how whales have been offloading thousands and thousands of Bitcoins, tens of thousands of Bitcoins even, just into the market, which I think is pretty well agreed upon that that's what's been happening. That's been great for the distribution, for the concentration risk, because these whales have just been distributing these Bitcoins out. But yeah, on the other side of the coin is we have these DAT companies, and I really think Strategy and I guess what's the other one? Metaplanet are probably the only ones that really matter. They're very concentrating risks. I don't like it.
Yeah. Very important to the concentration risk of Bitcoin is the number of ETFs that are available, and obviously, I think BlackRock and that has their ETFs now have way more. I guess they are distributed because there's a lot more holders, right?
Exactly. I'm not too worried about things like BlackRock.
But there's more. Like, I guess, and this popped up a few times. So thank you, Dan Whiteley87 from TikTok. Vanguard famously came out and said they didn't see any value in it. They're not going to do it. But there's been some news around them allowing some access to it. I actually don't know the story, but it's popped up a few times. So I was wondering if you know anything about the Vanguard ETFs.
No, I don't actually. Sorry.
No.
Yeah.
Good chat. Good chat, Jared. Yeah. Got any hot takes? No? Damn.
No, because Vanguard historically been very anti-crypto, right? That's what I know about Vanguard. And they did, I think last week we spoke about how they changed their tune. They were, maybe not changed their tune, but I think they finally relented and were like, all right, we'll do some kind of thing in crypto. Fine, we'll do it.
Vanguard will allow customers to purchase existing ETFs crypto via...
Well, there we go. Okay, so they haven't outright banned crypto anymore, which is, like these are all early steps, the baby steps to allowing it.
Yeah, nice. Well, then, so the new CEO is ex-BlackRock, so he gets it. Thank you, Skynet. Oh, man.
Skynet, thank God, saved the day.
Skynet saves the day. Jared, you could have Googled it, but no, we just had to ask Skynet.
Look, I've only got so many fingers.
The answer is 7, by the way. He's missing a few.
Yeah, well, they say never ask a question you don't already know the answer to, but I broke that rule. There you go. There's some hot takes. All right, yeah. So we've been running now for, an hour and 20 minutes. Thanks for hanging around, everyone.
Yep.
I'm surprised. Last week it was, I guess, real pits. It was, maybe we hit the bottom last week just because we had 3 people watching us. I don't even have that many mums, so I'm confused as who they could be.
Well over 100 today.
How many do you have? Just 2, right?
It's just the 2.
Just the 2? Just the normal 2?
How many do you have, Nick? But you know what? I think we've almost wrapped it up. Any other hot news from the week, Nick? How's your life been?
Yeah, good. Yeah, I think last week I was actually feeling a bit sick. So I don't know if it came through in the podcast, but I'd taken the previous day, like the Monday off. But today I'm feeling good. We're back on it. My whole family is sick, but I've come out the other end.
Speaking of the conference, we have all 2 days the live stream up on YouTube, and we'll be chopping them up into its individual interviews, or the good ones anyway, and they should be coming out over the next week and a half.
How many people did we interview?
I interviewed about 16 myself.
Jeez,
Oh my God.
And I think Lee, you did 2. And
Jared really did the heavy
Yeah,
lifting
nice.
on this
And,
conference.
Yeah, I did 0. So
I just had fun.
yeah.
Yeah, and that was really good.
Thank you,
there's
Jared.
There's some really good alpha on some of the chats. We spoke to day traders. We spoke to Korean influencers, Bitcoin miners from Papua New Guinea, the head of Deca, 3 accountants, and a partridge in a pear tree.
Yeah, we did. Oh, no, there was. Oh, I know. I did an interview with. I think she might have been Chinese, but the Chinese fashion influencer who jumped on there.
Yes.
Oh, nice.
And I couldn't understand it. Well, the accent was a bit thick. I couldn't understand what she was saying, so I just kind of like randomly just gave her responses. I don't know if it made any sense because I don't even know I still don't know what she was.
So she was doing a hot take interview where she was like, "Is this thing profitable or not profitable?" But I could hardly understand it. You just said not profitable to every single one, and it completely ruined her content. So
What a dick.
she's like, "Oh no, I won't do the accent." No,
Yeah,
no, I
that's
won't."
Sabrina, Sabrina, if you're listening, I'm sorry. I didn't mean to ruin your content.
I thought I was supposed to be the downer.
Oh, we can't leave on that. We can't cry our way out of here, Nick.
Yeah. The only thing we haven't spoken about is ETFs. I feel like this is more of a boring topic because, every week we come in, ETFs are up, ETFs are down, like they're up, they're down. The only sort of hot take I have from the ETFs news is that Bitcoin's down, Ethereum's up, is the sort of broad strokes. Why is this? What does this mean? I don't know. It feels like the Ethereum ETFs are more like trader focused. Maybe traders are getting in there. They're really trying to do that swing trading kind of thing using the ETFs, and the Bitcoin ETFs are more sort of, I don't know, like an allocator kind of ETF where people are more in it for the long term, looking at the longer range things. What does it mean that the Bitcoin ETFs have had massive outflows? It's not really good news. But yeah, I don't know. It is what it is. Bitcoin is obviously at sentiment super low at the moment. The ETFs, they seem to be structured differently when you look at the Ethereum and Bitcoin ETFs. So it's probably less useful to compare them in terms of outflows and inflows, because obviously theoretically, Ethereum has actually been down more than Bitcoin, like the price wise. Yet they've had net inflows over the last week. Are people trying to front run the whole staking ETF idea? Don't think so, because you'd buy the staking ETF, you wouldn't buy some other random ETF. But yeah, I don't know. Anyway, I think other than that, I think we've covered most of the news. Thank you, Skynet, and everyone else who contributed to the chat. It was awesome. Yep. Loved having your feedback.
It was.
Please join us again next week. We'd love to have you. If you've got any questions in the meantime, reach out. We're just 2 dudes that will answer your questions, and we're not like yeah.
Thanks for
just
clarifying.
2 guys, 2 cups, fortunately. And
just 2 dudes in chairs.
Yeah, that's right.
Yeah, we still haven't. I still don't think we're as popular as like the conference chairs.
Yeah, the empty
but you know
chairs.
what? One day,
Yeah.
we'll
Good.
top their numbers.
All right, we've got 1 more subscriber. Excellent. Thank you.
Yes.
But yeah, hopefully see you guys next week.
Yes. Bye, everyone.
Catch you.